Hello and welcome. You're watching Business Today Television. I'm Sakshi Batrea and you're watching this Diwali Special edition of Money Masters on our channel as the Festival of Lights really brings in new beginnings, prosperity and abundance. It is also the perfect time to reflect on our financial goals, to declutter some of the old habits and also to make the room for a more smarter investments and also illuminate our own wealth journey with better financial planning as well. So this is the show that you really need to watch in case you've been looking for some sort of a guidance on your own investment journey. To help us to do that, we have a power-packed panel with us on this Diwali special of experts joining in. Priti Rathi Gupta joins in. She's the founder of LXME. She's also been empowering many women to take charge of their finances for many years now. Warm welcome to you, Priti. Good to have you with us. We also joined by Mr. Harshvardhan Roongta, the CEO of Roongta Securities. He's a trusted name in personal finance and wealth management. Warm welcome to you, Harsh. Thank you so much for taking the time out. And we also have Mr. Pankaj Mathpal, the founder and managing director of Optima Money Managers, known for his practical insights for goal-based investing. So thank you so much for taking the time out. I wish you all a very happy and prosperous Diwali and looking forward to this conversation. Priti, I'm going to be kick-starting this conversation with you. Tell me, what is the one thing that most of your clients have said this time around, since most of them are women and women usually are seen as bigger investors of gold and silver. This must have been a year that they must have cheered a lot and run away to the banks with over 50, 70, 80% kind of profits.
Absolutely, Swati. Firstly, wishing a very, very happy festive season to you and all your viewers and my co-panelists here. Thank you for having me. This is indeed, I think, a time where I think women are really celebrating because gold has always been our sort of preferred go-to investment tool. And I think for our women at LXME, and by the way, my platform is called LXME because, it's an ode to the goddess of wealth. So how can women not just pray to the goddess, but also become Lakshmis themselves? So I think there has been a lot of learning that our women have done. And yes, absolutely. I think between gold and silver, there's just a lot of talk in, what to invest, how much to invest, where to invest. I think what we are very proud of is, as per our sort of thesis of saying that gold should be a part of your portfolio, but it should form, maybe 10 or 15% of your portfolio and not more. Most women have actually aligned to that. It is very easy to get carried away because, seeing the gold prices over the last 1 year or 2 years. But when we actually speak to them, first two things we actually tell them is that one, gold is a long-term investment. And actually the time frame of gold investing has become even longer, sometimes longer than equities. Because what we've seen is gold goes through very long bull runs and also very long sideways run, may not be bear, but at least sideways. So keeping in mind that you're putting in money into gold for the next 10 years and more is something that we advocate, and a lot of our women are following that. Silver, of course, is open to a lot of conversation, where we've said that silver, not as an investment tool, but really looking at it more from the perspective of it's an industrial metal, and the prices typically will be volatile, will go up as, I've always seen generations, right? My Nanaji, my Dadaji, they always spoke about silver chandi satta, right? Which would always be around this time. And I think the one key lesson we need to take away from that is that silver is hugely volatile. So if you're planning to make it a part of your portfolio, be very, very conscious that the prices will, fall and rise with as much gusto, and also that it is an industrial metal. So be careful, because unlike gold, you cannot really consider it as a store of value. So yeah, very excited about generally just investing. And I think more on Diwali, the one thing that we tell our women is that this is the time to pause, reflect. Hum ghar ki, we do our house cleaning in Diwali. You should actually look at your portfolio, clean it, look at what you want to keep, how do you want to realign with your asset allocation. This is that time to actually focus more on your asset allocation and looking at your portfolio and saying how you can make it even more healthier for yourself.
Fantastic. So don't get carried away with the kind of gold and silver rally that we have seen. Yet just stick to your own asset allocation of 15 to 20% maximum to gold and silver. But yes, silver is also now coming to be, whether it is now a part of the core portfolio, just as how gold is or not. That's the key point. And I'll come to Pankaj ji with that. Pankaj ji, you've been talking about asset allocation for far too long that we all know. Tell me, has anything changed after the recent Super Bull in gold and silver rally that we have seen in terms of how an average investor should be looking at both these assets?
First of all, happy Diwali to you, Sakshi, and to Priti Gupta, Rathi, and Harsh, and to all the viewers. And yes, asset allocation, I believe, is the key to success of the investment portfolio. And the investors who believe in this, who follow, who maintain the asset allocation, they always seems to be happy, because last 1 year, what we have seen, equity has not delivered returns. Even if you see mid cap, small caps, there are negative returns, but gold, silver have surprised to the investors. So investors who believe in asset allocation, see, nobody knows at what time what will perform better than other asset classes, because there are cycles. Sometime equity delivers very fantastic returns. If we see from 2021 to 2024, to be very precise, till September 2024, equity was delivering very handsome returns. But thereafter, we saw there is a good correction, but gold and silver have definitely delivered higher than equity. But how much allocation you had in gold and silver that time, that matters, because now when gold and silver are at peak, then more investors are entering now. So most important thing is that at every point of time you should maintain proper asset allocation. And even it's not like that when we say that 100 minus your age should be your allocation in equity. No, it depends on your risk appetite, your investment horizon, your objective of investment. But based on that, you should maintain allocation in different asset classes and in long term as well. I'm not saying only that equities for long term. Even as Preeti was explaining it, gold also has cycles. We have seen from 2013 to 2018, gold did not deliver any return. But if you see now, the CAGR in last 10 years, in last 20 years is around 16%. So that is why if you stay invested in any asset class for long term, then only you can reap the benefits. So asset allocation is very, very important. But yes, how much in which asset class, it will depend on your again that what is objective and how long you want to stay invested.
Sure. Harsh, coming to you now, you've been, for long talking about mutual funds as an asset classes for the average common man. And we have seen how mutual funds Sahi Hai campaign has led to a sharp surge in the demat accounts. Every household now has started to talk about having a mutual fund, either cumulatively or for everybody in the houses as well. SIPs have been surging despite the underperformance in the equities every month on as well, and that's an encouraging sign. Tell us one learning for mutual fund investors, even at this point in time when they see their portfolios in red. What would you want to tell them, and how should they prepare for their mutual fund investments in the new Samvat year?
Hi Sakshi, it's always a pleasure speaking with you, and the great work that your channel is doing. I think there's a lot of credit to be given to the media for bringing awareness and spreading it across the nation. So while there could be concentrated pockets who would have information about what to do, I think that the reach of media to go into the household and explain the benefits of investing, I think that is reaping rewards. So, now coming to the topic that you asked about, what is the importance of mutual funds? So let me break it down into three parts. The first one being that all of us now have understood, all of us, by all of us, I mean even in savvy investors, even investors who are not so financially savvy, but understand one concept, that is that if you want to beat inflation over long term, which should be the objective of investing, you will need to take certain risks and you will need to invest into equities. Now, if that is your objective, then you start looking at equity as an investment. earlier days when it was unregulated market or rather less regulated, when there were a lot of gaps between the functioning, what's the ideal way of doing things in the stock market and what is actually happening. So that time we felt that the perception about stock market and investing into equities was that it is like a casino. It's like gambling. Now that perception has changed with mutual fund Sahi here, with SEBI coming in as a regulator, doing a fantastic job in terms of investor protection. So the population at large has understood this concept that in case you want to create wealth, you want to beat inflation, equity is an asset class where you need to invest your money. Now, having said this, how many people, how many investors would have the acumen to scan through the stock market, look at all the 6,000 companies that are listed, and then have the ability to pick something to invest? So, if I understand that I want to invest into equity, there are others who believe that we should invest into equities. But then the second challenge comes in: how do I invest? How do I select the company? So I have the intent to invest, but I do not have the ability to select the companies to invest into. Now, there is exactly where mutual fund as an industry comes into the picture. Now, mutual fund industry is what? So they are asset managers. And an average Indian investor who wants to invest into equities picks up a scheme that a mutual fund is offering based on their risk profile, their requirements, and the professional fund manager of that scheme is equipped with the entire team of research to decide which company to buy into, buy, when to sell. So, well, I as an investor had an intent to invest. Now I have a vehicle which helps me invest without me having the expertise. So I think this marrying of that situation wherein one is the intent, the other is the ability to invest, enables an investor to take the benefit. Now the third part, that the final, and that's very important again, is that the allocation to even one mutual fund scheme enables me to get a spread of about 30 to 40 companies. So I have diversification, I have professional fund management at a very reasonable cost. So I think this is what has been accepted by investors now, and we are seeing the inflows, which is reflecting into the inflows and the confidence. People have understood that over long term wealth will be created. 1 year of negative or flat returns does not really bother them anymore.
Absolutely. Let's now come to understanding where should the money truly go in case you are looking to design your portfolios or rejigging your portfolios at this point, something that Priti also marked out, that this is the right time to get out of the underperforming or probably not so well thought out investments that you have done so far. In fact, look at those that can truly add value to your portfolios. So Priti, for women specifically, what are you advising? Where should they invest this new Samvat?
So I think, Swati, I always give this example that one of the biggest mistakes we'll end up doing is, if the gold prices are rising, we put more and more money into gold. Silver is rising, we put more money into silver. If the equity markets are on an upward move, we start putting more money into equity markets. And I think the best analogy I give women is that, when the markets are, when the stores or shops are on sale, do you buy or do you, what do you do? Do you buy or you sell? And when it is not on sale, when everything is expensive, what do you do? Do you go and buy? And you should use the same behavior even when it comes to investing. Assets or asset classes which are actually have rapidly risen over the last few years or months, you should really evaluate whether this is the time to actually get into it. So literally like saying, if equities today are undervalued, it's a great time to actually go because it's like a sale in the markets, right? But the underlying theme of this has to be your asset allocation. And I think like Pankaj rightly said, that the first important thing, and this is what you need to recalibrate in Diwali, is my asset allocation in line with my, goals? Because with every year, our goals changes, our earnings change. So are they really in line with what I will need to accomplish my financial goals? And if they are not, it's the right time to recalibrate. I think I always, it's always recommended that you do not look at, because your financial planning is not just for tomorrow. What you do for tomorrow and the next 3 months and 6 months is essentially your short-term planning, like your emergency funds, having your risk cover in place. But the rest of it is long-term, and that you cannot evaluate and you can't say, okay, what should I do right now? but look at the long term and say, what are the steps that I need to take for my long term goals? So this is actually the apt time. And, we all pray to the goddess. But we are also, as in our Vedas and the Hindu literature, mythology and literature, it is said that you need to do your karma as much. And this is the karma that you need to do for building a right financial plan. You need to work on it yourself, recalibrate, give it some time. And look at it in terms of saying, okay, and it's a great time. So for example, giving gold as an example, if it is supposed to be 10% of your portfolio, and today, because of the gold prices, it has actually gone to 20%. It is worthwhile to say, okay, I need to either put more money into equities, right? Or recalibrate, remove from gold and put. And that discipline is actually the only way one creates lasting, consistent wealth over a long-term period. So I think between gold, debt, and equity is where your financial planning is very efficiently done. I know there is a lot of noise around saying, okay, real estate, also cryptocurrency, or, whatever are the different options that one has. I always say that please cut out the noise. Look at gold, equity, and debt. And like Harsh said, I think definitely use mutual funds as your key or the medium to invest into any of these asset classes, because you are not somebody who's going to spend hours trying to research. And especially for women, it's even more difficult, right? One of the things that we suffer from is time poverty. So you don't want, the reason you leave out that decision is because you don't have time to research. When it comes to investing and doing it via mutual funds, you don't really need to do or put in that time yourself. So
I think the perfect way is to find out where are your outperforming assets. In case you are heavily invested in gold, maybe just look at taking out some money and probably looking at reinvesting it into equities. And because now, since all of our panelists do believe that now is the time for riskier assets to risk on sentiment to get back onto the investment trajectory. Pankaj ji, help me understand, in your thought, what are you advising maybe a 30 year something person who's looking at long term goals and investment ideas at this point in time? Where should the money go?
Exactly. First thing, set your financial goals. You are 30 years old, but you will have different goals like emergency fund to your retirement planning. So some goals may be short-term goals, some may be medium-term, or some may be long-term goals. So if you talk about short-term, like you want money within 1 year or within 2-3 years, you cannot rely on equity, because we know equity is volatile in short term. But yes, to create wealth in long term, equity is the best asset class. So for short term, definitely you should have higher allocation in debt or mostly in debt instruments. But for medium term to long term, you must have allocation across equity, debt, as well as gold. But if you are investing for your retirement benefit, for example, which is 25 to 30 years from now, for that your higher allocation, say 70% or 60% should be in equity, 20% could be in gold, and 10% could be in debt. But if your goal is something like 5 to 10 years, in this case equity allocation can be 50% and gold can be say 20-30% and rest can be in debt. But one more thing which is very important to understand, most of times investors, they have recency bias. So whatever you see in recent past, you always follow that. For example, when we saw that some thematic funds were outperforming, most of investors were buying more and more units of those thematic funds. Similarly, in small cap funds, we saw a rally when small cap funds were delivering good returns. Most of investors, they invest in small cap funds. And now what we saw, even in large cap, the loss is lesser, or in last 1 year, we are seeing almost negligible returns in large cap. But when we see mid cap, small cap, there are negative returns. Similarly, now investors are investing in gold or silver when we see already means rates have peaked. So right now is a time that you should enter into equity for long term. Gold, silver, I'm not saying that you should not invest in SIP mode to some allocation. If you do not have in your portfolio, you can invest. But like more and more investors are investing in lump sum in gold and silver now, it may be very risky. So as you asked for 30 years old and based on the objective of investment, risk appetite and investment horizon, you should allocate in different asset classes.
Fair point. Harsh, coming to you, everybody agrees equities is going to probably be an outperforming one now that gold and silver have already run up way beyond our imaginations. Which are the top mutual fund categories that you would advise, investors to really look at or at least have some exposure to in their overall investment portfolios? Should it be just index? Should it be beyond index? Should it be thematic like Pankaj ji highlighted? Where exactly should the money go?
Well, Sakshi, the entire breakup and allocation of mutual funds into each individual's portfolio is very, very personal in nature. Everybody has to understand their own requirements and based on which they will create. Like, for example, if there is an investor who is coming into the mutual fund arena for the first time, or rather investing other than fixed deposits for the first time, may want to come in a conservative manner, which means that you will not go all in with your money into equities. You may want to take baby steps into this industry where you will have an equity exposure of approximately 25%. As you gain confidence, as you understand what is happening, what is the volatility that is associated with investing, then you will slowly and gradually increase your allocation. Now, so that is going to be your approach. There is no hurry. I think investors tend to believe that the moment they realize that they need to invest into equities, they need to go all in. Now, this will be the case with people who have always been sitting on sidelines, listening that equity markets do well. And when they see their neighbor making a lot of money out of equities, then they will remember, now they will realize after the markets have gone up, they will now feel that now I also need to come in and I need to come in all in. And they invariably come in at the peak of the market. So when the markets are peak and they've entered, the next immediate step is that they start making losses. So then again, they reinforce their own thought, which they had believed and their parents had told them equity market casino hai. So then they say, okay, now I will not come into equity market again, and I will write it in my will that if my kid also enters market, he will not get anything. So the idea is that you need to understand there is no rush, no hurry. Suit yourself, get used to that kind of thing that you're entering into for the first time, and thereafter take it further. I'll give you a very small example which I use in all my interactions with investors. When you just ask your family member to get you some hot water for shower for bathing purposes, what is the first thing that you do? Even if that bucket of water has been boiled by your mother and she comes and brings it in front of you, there is no way you're not going to trust her, right? But what's the first thing that you do? You dip a finger in it and test whether it is warm enough for your comfort, right? So same way when you're coming into the stock market for the first time or you're investing into any new product, do not go all in. Test yourself first whether it suits your profile and then you start increasing. Now coming to very specific question that you had as to how the allocation should be. So understanding that there is a person who's already been investing into equity mutual funds, I think the time has come where you need to make a very thoughtful allocation towards large cap, mid cap, and small cap. So you could include all of them in your portfolio. For a very aggressive investor, there would be higher allocation to mid and small cap, but you cannot avoid large caps. For a relatively less aggressive investor, you will have larger allocation to the large caps and lesser in mid caps and even lesser in small caps. So I think do not ignore any segment of the market right now because India is in a growth trajectory. You do not want to miss out on the growth that we are going to look at in the next decade. So have allocations in all three segments. However, moderate the allocation based on your individual risk profile.
Fantastic. Okay, last few minutes on the show, and I'm going to come to each one of you to ask you your own biggest bet that's going to be in Samvat 2082 now. Preeti, starting off with you, what is the one asset class category of investment? Where exactly do you think the outperformance will come in this Samvat? Could you unmute yourself, please, Preeti?
Sorry. Yeah. So I think, Sakshi, I'm very clear. For me, I think it has always been equity. If there is one asset class that has beaten inflation over a long-term period, it is equities. And I continue I think, I wouldn't just say my fondness and love, but data-driven informed decision-making will always drive me towards investing money in equities, especially for my long-term financial goals. It's very important here to say that while we talk about investing in equities or investing in gold, one of the things that and given where we are today, the dynamic or sort of the absolutely, a scenario where we don't know what tomorrow holds, it's very important to take your short-term safety nets, build those, and post that, I think, just invest in equities, because what we've seen is, gold, yes, like I said, it has its cycles. Right now, maybe in a bull cycle, it may go sideways, but other than that, whether it's real estate or any other asset class, has not beaten inflation. So it
Equity.
continues to be equity.
Okay.
It continues to be equities via mutual funds.
Equities via mutual funds. That's going to make Harsh very happy now. Pankaj ji, to you. What exactly are you going to be betting big on? Give us specific now.
Equity, of course, and through mutual funds only, because I know that
Which category of equities?
Yes, so mostly my investment is I'll say across the segments, but at this point in time, I believe that flexi cap category will be the best choice, and my investment, if I top up, it will be flexi cap.
It'll be flexi cap. Fantastic. Harsh, to you, thematic funds, or do you think market cap based? Where do you think, which is the kind of category that's going to outperform in this equity world?
So, Sakshi, if there is a 1 year view, as you said in the new Samvat, if you're talking only about 1 year, then I think there has to be an allocation between large caps and gold, and I'm now cautious on silver. I'm getting worried on the rally that silver has undertaken. But only for 1 year, I think, not the holding period not being 1 year, but investments would be large caps and gold. In case you're looking at a horizon which is at least 10 years, then my allocation in mid caps will be larger. In the large cap will be a certain portion, and then of course gold and silver.
Okay, fantastic. Well, thank you so much. Out of time, but this conversation could have actually gone on and on. But thank you so much, Priti, Harsh and Pankaj ji, for being with us on the program. Wishing you yet again a fantastic upcoming Diwali and the New Year. We'll catch up very soon with you again to speak to each one of you on more details when it comes to investments. Thank you so much.
Thank you, Sakshi. Thank you. Happy Diwali, everyone.
Thank you. With that, viewers, we wrap up this special conversation with Money Masters. I hope you've got to understand. All the panelists do believe that right now is the time, after a long drawn underperformance, equities could be outperforming in the new Samvat year 2082. Pankaj ji did mention that in case you're investing for the next 1 year, flexi cap category of investments in equity mutual funds could outperform. Harsh also did say that when it comes to his 1 year horizon, large and mid caps is where he would invest. But over the next 10-year period, it will be mid caps that he will focus more on when it comes to his equity mutual funds portfolio as well. Stay tuned with us on Business Today Television as Diwali special conversations continue on your screens.
Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today Television on our ongoing series of Diwali specials, the Market Guru segment. We bring to you brains on the Lal Street who navigate bull and bear markets with equal ease. They are home with volatility and have made supernormal returns for their shareholders. Our guest today, ladies and gentlemen, is Mr. Ashish Somaya, a veteran of the Lal Street. He's the CEO of White Oak Capital Asset Management Company. Mr. Somaya manages about 36,000 crore rupees in domestic equities via mutual funds and PMS, and of course above 55,000 crore rupees in global funds. Namaste Ashish ji, a very warm welcome to you. And Diwali is turning out to be good for the markets. We've been running up quite sharply after almost 10, 11 months, 12 months, 13 months of flat returns. How are you watching sentiment at this point of time when monthly SIPs in mutual funds have hit a record high of 29,000 crore rupees each month?
Yes, Yes, so I think, a lot of people have been, general commentary in the past, has been that if the market doesn't do too much or if people don't make returns, then the interest levels on the SIPs and all will start dwindling and, SIPs will stop, or that a lot of people who have entered after 2020, they may feel discouraged from continuing investing, etc. Thankfully, a lot of those fears haven't really played out. And in my experience, I have seen that at any point in time in the markets, there are always different cohorts of people. Like some people who have seen a couple of market cycles, some people who have seen only one market cycle, some who have entered only